In this vein of economics, the limited government free market vein of economics, there are two acceptable views of tax policy. The first is the purpose of tax policy is to pay for the essential functions of the government. That's it. Now, another goal is to only tax what you need to do this, and you negatively affect productivity as little as possible. So in other words, figure out how much it costs, only take the taxes to pay for those things, and don't hurt productive people. In other words, don't get in the way. Don't mess it up too much. Mess it up as little as possible. So that's the first one. The second one is slightly different. The second one is the purpose of tax policy is to get as much revenue as possible while still negatively affecting productivity as little as possible. So do you see the difference there? In the one case, you say, all right, how much does it take to have the best military in the world? Okay, it's going to take this much per year, so that's there. Well, how much does it take to run our judiciary system? Okay, it takes this much. Well, how much does it take, et cetera, et cetera. So you figure out what the essential function of the government is. You figure out what it will cost to run it adequately, at high quality, per year. And you say, this is how much we need, this number. And then you figure out how to get it. That's one way to do it, is simply pay for the essential functions of the government, only tax that much. The second one is not based on what the functions of the government are, but let's get as much as possible, as much revenue as possible in. This second purpose, or option of a purpose, is only acceptable because of the second part, the clause, which says you still don't hurt the economy as much as possible. So you affect productivity as little as possible. Either way, pay for the government and don't mess things up. That's good tax policy. Now, just let me explain what we talk about when we say negatively affect productivity as little as possible. So not all taxes are the same. We need taxes to run a government, that's obvious. For instance, do we remember the 39.1%? What is that? Do we remember at the beginning of our class? What is 39.1% tax? And America is the best in the world at it, the highest in the world at it.
Is that the corporate tax?
Yes. So America has a 39.1% corporate income tax rate. So that is the highest in the entire developed world. Okay? So that means we are the least productive or the least competitive in the whole world in that category. So that would be a harmful tax. Every tax is going to take something away, but you have some taxes that are less or more harmful towards productivity. So if you're trying to encourage a productive economy, one of the first things you would do is you'd get rid of that high corporate tax rate. And that way money can come in. Jobs can be created here rather than in every other country in the world that has a lower rate. Capital gains taxes. So you sell a home, you make some money, you're taxed on it. Or you make an investment in the stock market, you make some money because that stock did well, you're taxed on it. That's a capital gains tax. They also call that the unearned tax, but I don't think that's fair. But essentially it's a tax on capital gains. Well, that is a very, very unproductive tax, because if you are investing in the stock market, investing in a company, that's fueling productivity somewhere else. That's giving someone else a job. That is fueling innovation and invention, etc. Or when you sell your home, if that is an investment home, well, you just help someone else get a home. You just help productivity. In other words, you did something useful and good. So another very harmful tax is capital gains tax, because it is that kind of tax which fuels productivity. Okay. Now there are other taxes that are less harmful. Okay, because remember, you get less of what you tax, you get more of what you pay for, right? For instance, the graduated income tax rate, so that the richer you get, the more you get taxed, that's a very unproductive tax. What does it mean? You get less of what you tax? That means you get less high earners. That means you get less people being productive and making money and serving the community. Someone says, well, if I make $1,000 more a year, they're going to tax me that much more. Well, I'm not going to do it. I could be more productive. I could do this next thing. I could work harder or, do whatever it is more, but I'm not going to do it. So you get less of what you tax. So next thing you know, you get less people rising up to that level and rising to the next level of productivity. So once again, a graduated or progressive income tax rate is rather harmful because it hurts the people that are trying to be the most productive. And it actually incentivizes being at the bottom. Because if you're at the bottom, well, you don't really get taxed. In fact, you get a rebate, you get a return. So you're getting more of what you don't want, which is people at that lower level, and less of what you do want. Now, what's a tax that is less harmful? The sales tax, for instance. Because the sales tax, number one, is a voluntary tax. If you don't want to be taxed that day, don't buy something. I mean, really. It's also a flat tax because everyone's taxed the same. It doesn't tax the productive person more, and it doesn't subsidize or give something special to the person who's less productive. So while we don't like the idea of paying more for products or services, it really is one of the least harmful taxes you can have. It's flat, it affects everyone the same, and actually, in a good productive economy, you want people to save money and not to just go out in debt and be spending. So in fact, it will encourage thrifty behavior and saving, which is what you want in a productive, solid economy, and it doesn't hurt production. In other words, yes, every tax is going to hurt somewhere, but the sales tax is an example of something that is the least harmful to the economy. So when you say negatively affect productivity as little as possible, that's what it's talking about, is pick taxes, have taxes that don't hurt your economy, like that capital gains tax or your corporate income tax rate. But either way, pay for the government and don't mess things up.